Hey there, future investors. Do you want to give your kids a head start in life? Teaching them about money early can make a huge difference in their future. In this video, we'll show you how to secure your child's financial future with smart investing strategies. Whether it's saving, stocks, or fun ways to learn about money, we've got you covered. Let's dive in. 1. Why investing for kids is important. Have you ever thought about why starting to invest at a young age is such a big deal? Well, let me tell you. The earlier you begin, the more you can benefit from something called compound interest. Imagine it like a snowball rolling down a hill. It may start small, but as it keeps rolling, it gathers more snow, becoming larger and faster with each turn. Let's dive into a comparison to really understand this. Picture two kids. One starts investing just $10 a month at age 10, while the other waits until they're 30. Thanks to the magic of compound interest, the first kid could end up with hundreds of thousands of dollars by the time they retire. On the other hand, even if the second kid starts investing more money later in life, they won't be able to catch up as easily. This shows just how powerful time is when it comes to investing. Teaching kids about investing early gives them a significant head start in building wealth. It's not just about having more money, it's also about cultivating smart financial habits. By introducing children to investing at a young age, we empower them to make informed decisions about their finances, set long-term goals, and develop a sense of financial responsibility. Furthermore, investing can teach kids about patience and discipline. They'll learn that building wealth isn't an overnight process, it requires time and consistent effort. As they watch their investments grow, they'll understand the value of setting money aside and letting it work for them over time. So, whether it's through a small monthly contribution or a special savings account, encouraging kids to invest early is one of the best ways to set them up for a successful financial future. Let's give them the tools they need to turn that small snowball into a giant one rolling effortlessly down the hill. 2. Teaching kids the basics of money. Before kids can start their journey into investing, they first need to understand the basics of money. It all begins with questions like, where does money come from? How do we save it? And how do we spend it wisely? These foundational concepts are essential for making informed financial decisions later in life. A fantastic way to teach kids about money is through the 3-jar method. This method involves giving kids an allowance and dividing it into 3 jars, one for spending, one for saving, and one for investing. By doing this, children can visually see how money is allocated and understand the different purposes it serves. The spending jar is for immediate use, allowing kids to buy small items or treats. This helps them grasp the concept of budgeting and making choices about what they truly want. The saving jar is for larger goals, teaching kids the importance of patience and planning for the future. They'll learn that sometimes it's worth waiting to buy something special, rather than spending impulsively. Lastly, the investing jar introduces them to the idea of growing their money. Even a small amount can turn into more over time, thanks to the power of compound interest. This simple yet effective habit instills valuable lessons about money management and prepares kids for smart financial decisions as they grow older. By learning these principles early on, children are better equipped to handle their finances confidently and responsibly in the future. They'll understand the importance of balancing spending, saving, and investing, setting the stage for a financially healthy life. 3 best investment options for kids. Now that we know why investing is important, let's explore some fantastic investment options for kids. Savings accounts. Savings accounts are a safe place to store money while earning a bit of interest. They help kids get used to the idea of saving and provide a secure way to start their financial journey. Stocks. Owning shares in companies like Apple or Disney can be exciting for kids. It's a great way to learn how businesses grow and to understand the concept of ownership. Plus, watching their stocks increase in value can be very rewarding. Index funds. Index funds are a low-risk way to invest in a group of stocks simultaneously. They offer diversification, meaning the risk is spread across various companies. This can be an excellent choice for kids because it's simpler and less risky than picking individual stocks. Custodial accounts, UTMA/UGMA. Custodial accounts allow parents to invest money on behalf of their kids until they're old enough to manage it themselves. These accounts can hold various assets, such as stocks, bonds, and mutual funds. They provide a flexible way to invest for a child's future, whether for education or other long-term goals. Custodial Roth IRA. If a kid earns money from a small job, a custodial Roth IRA is one of the best long-term investments for their future. Contributions to a Roth IRA grow tax-free, and because kids have so much time ahead of them, their investments have a significant opportunity to grow. This is a powerful tool for building wealth over the long term. Investing early allows kids to harness the power of compound interest and develop essential financial habits. By starting with these options, kids can build a solid foundation for their financial future, learning valuable lessons about money management, patience, and the benefits of long-term thinking. Encouraging them to explore these investment opportunities sets them on a path toward financial independence and success. For how much should you invest? Many parents might think they need a lot of money to start investing, but that's not the case. Even small amounts like $10, $20, or $50 a month can grow significantly over time. The key is consistency and the power of compound interest. Starting with just $10 a month might seem small, but with regular contributions, this can add up. If you can increase it to $20 or $50, even better. The most important factor is making regular investments. Compound interest works like a snowball effect. Your money earns interest, and over time, that interest earns more interest. This compounding can lead to impressive growth, even with modest amounts. Small, consistent investments make investing accessible and less intimidating. By investing what you can afford, you build confidence and understanding. As your financial situation improves, you can increase your contributions. Additionally, regular investing instills a habit of saving and financial discipline. It teaches that building wealth isn't about having a lot of money up front but being diligent over time. In conclusion, the amount you invest matters less than the consistency. Start with what you can afford, and over time, these small, regular efforts will grow into a substantial financial cushion, showcasing the power of long-term investing. 5 fun ways to teach kids about investing. Teaching kids about investing doesn't have to be boring. Here are some fun ways to make it exciting. Stock market games. Apps like Stockpile or Greenlight let kids buy and track stocks with real or simulated money. These apps are engaging and help kids understand the stock market's basics without any risk. Family Investing Challenge. Turn it into a fun competition. Let kids pick a company they like, track its stock for a few months, and see how it performs. It's a hands-on way to learn about investing and decision-making. Books and stories. Books like The Richest Kid in Babylon or The Barefoot Investor for Families teach money lessons in engaging ways. These stories make complex financial concepts more accessible to kids. Making learning fun helps kids stay interested and build strong money habits for life. By incorporating games, challenges, and stories, kids can develop a positive attitude toward investing and understand how it works, setting the stage for a successful financial future. Investing for kids isn't just about making money, it's about teaching them valuable life skills. They'll learn patience, smart decision-making, and how to manage money wisely. And the best part? The earlier they start, the better their financial future will be. Investing teaches kids patience by showing them how their money grows over time, highlighting the value of delayed gratification. Smart decision-making is fostered as kids research and choose where to invest, learning about companies and market trends. Managing money wisely becomes a habit as they allocate funds for savings and investments. Starting young gives kids a significant financial advantage. The more time their money has to grow through compound interest, the more secure their financial future will be. It's about laying a solid foundation and equipping them with essential financial tools. If you found this video helpful, don't forget to like, subscribe, and share it with other parents. Let's build a future where every kid grows up financially smart. See you in the next video.